All right, ladies and gentlemen, I hope you had a wonderful day off and are enjoying your Labor Day. We actually got quite a week ahead of us with the non-farm payrolls on Friday. We even got a secret set of data that's going to have a big reaction on the market. I'm going to go over all of that with you, but before we get into the watch list, before we get into talking about what we need to look for next week, I want to give you guys a little warning about 2025. I used to go outside in my backyard and make you guys videos, but I figured I would start off the watch list with a really big question that I've been getting a lot lately, and it's people talking about the market. What happens if we get a recession? We don't get a recession? Should they start the long term? Should they sell the long term? Should they do this? Should they do that? Should they all of these things? And whatever we get into 2025, I think there is a huge lesson that I think everybody needs to be reminded about. And if you do take this as a number one priority, I think it's going to change your life for the better. So we're going to go over that. I got a little bit of a question to start off the watch list with. Then I got the recap for the week, the plays, all that good stuff. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/The Stock Market. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, off the bat, before I get in any of it too, I messed up, you guys. I need your help too. I blew it. I forgot to sell out the NVIDIA that brought up the random account generator, and I didn't sell the TLT. So you guys did good. I should have sold both of those plays. We would have been at like $2,000, but even then, we got a little bit here. Post a random option trade. What we've been doing with this account every Sunday, or now in this case Monday, we are having everybody post a random option trade, keeping it below $100, preferably with time, and we are going to buy that play. But like I said, I forgot to sell out of NVIDIA before earnings. That got rid of that $400 profit that we had, and then we even had the TLT. So it goes to show, a couple of no sells, man. I mean, it could change everything. But Chad, add to that. And now, before we get into anything of this week, let's even talk a little bit about the long term, the market, what you have to be worried about, what you got to be looking at for 2025. I don't even know how I would word this question, because I got a bunch of emails over the weekend, both how should I start the long term? Should I sell out of my long term? Or they're saying now is the time I need to get out. What do you do in recession if you think this is going to happen? If the curve uninverts, are you supposed to sell out? All of these different questions. But here is the deal. I think in the midst of all of these questions, a lot of people are missing the number one thing. Do not forget, whatever happens to the stock market, the economy, anything of that nature, to act on it and take advantage of it, especially with your investments. You're going to need to have savings. You need to make sure that you have a war chest for whatever comes your way. This is why we always say, save that 10%. 10% of what you earn is yours to keep. You need to pay yourself first. It's one thing to react to the market, the economy, picking the right plays, selling out at the right time, but I think a lot of people are ignoring the fact of being prepared, having a war chest, having money, and whatever changes rapidly in valuations or markets, if you have a plan, you're going to be able to take advantage of it. If things that you want today are too expensive, become a lot cheaper in the future, will you be able to take advantage of it? It does not matter what happens, whether there is a big crisis, a small one, whether it lasts for a long time or a small amount of time. If you have a savings plan, you are going to be able to walk away with whatever situation a winner. And I think a lot of people are missing out on this. Yeah, we have our long terms. We could react to the short term on the trading. We've even made a lot of good long term pickups, but when it's all said and done, why do our long terms only go straight up, and why are we always active and not really getting too bothered by the market? It's because we're saving and always adding to it. We are going to be ready no matter what. There is always going to be a new deal. There's always going to be a way to reposition and balance your portfolio over time if you have money coming into it. So whether you want to start out, whether you think it's now time to leave the market, you think there's going to be a recession or all of these things, I think the answer to what you're going to do, it depends on your savings plan. And even more so, if you don't have a savings plan, I don't think you're going to be able to take advantage of a lot of the things things that are going to be happening moving forward, and vice versa. If you're like, hey, I think I'm going to sell, I mean, what is your plan? What's your plan for your money? Where are you going to reinvest it? How are you going to be putting it to work? Because if we do see a downside here in the market, it's not going to be forever. Again, what is your plan moving forward? How does that revolve around the money that you will be adding and saving? So that's the first big thing I wanted to get out the way, and I thought we should start off with. But now the second thing, once you have your budget, now we could talk about what you need to be looking for and buying. And even then, if we do see the market slow down or pick up, that's the ironic thing about this rate cut thing that we have moving forward. You have a lot of people talking about either a soft landing or a hard landing. If you get a soft landing, that means stock prices and a lot of things aren't going to be coming down. If we get a hard landing, then a lot of things are going to be coming down. Regardless of what happens, that's the beauty of this plan. And like I'm saying, once you have your savings plan, depending on how things move forward, what you need to be focusing on now are the names that you want to hold for a minimum of 10 years. I literally put all of the quotes here just so I could bash it into your head real quick. But these are all the main quotes. You want to hold for a minimum of 10 years. Act as if you cannot change your mind for 10 years. The best time to plant a tree was 10, 20 years ago. The second best time is today. Time in the market beats timing the market. The longer that you hold, the less riskier it becomes. These are all of the phrases that I've said over the years. These are taken from the Buffetts and big investors of the world, Intelligent Investor, Benjamin Graham, all of that. And the big factor with making good investments, especially with whatever the market throws at us here, are you buying quality names that you could see yourself holding for 10 years and are going to be successful in 10 years? And how do you find something that's going to be successful in 10 years? You don't go investing in flying cars or the next big thing. It's easy to hold a stock for a long amount of time and predicting they're going to be successful if they already have a history of being successful. How do you find names that are going to be successful 10 years from now? They have already been successful over the last 10 years. Yeah, there's a couple of caveats to that, and some names that were really good a couple of years ago, they're not as good today. But if you go and look at some of the biggest and best names out there when you bought them for your long term, or maybe you saw them at a cheap price, the fact of the matter is you already knew about them. You already knew about the success of a lot of names. Even then, in our long term, we picked up Meta a couple of years ago when the market was coming down. It was $90, but this is the modern area. We bought that in 2022. You already knew Meta was successful. Again, Netflix, that was something that people used a lot. Right now, because some of these names are really expensive and you're not going to be able to buy them, or you can, but you're going to be buying them for a premium. But what I want you to pay attention to, quality names that you know about and use in your life, these are going to be the cheap names that you could be adding to. And that's what I'm saying, like, whether the market slows down, hard landing, or soft landing, this isn't going to change. I'm going to be focusing on a lot of these names. Even then, my theory now is that a lot of these names that are high quality, we know about, already been successful, you use, they've been cheap comparative to some of these big tech names. If the economy does change after rate cuts, I see these value names we've been buying, I think they're going to go up, and then some of these growth names, they're going to be able to come down. But the point is, I am going to be using this over the next 10 years and trying to find quality, and then pretty much the names that are cheap today, they're going to be expensive in a couple years from now, and vice versa. The names that are expensive now, they're going to be cheaper. So right now, here are some of the value names that I like. We even bought Nike and Whirlpool. They're a little bit up. There's even a lot of other names that I didn't mention, but these names are actually cheap. But maybe down the road, some of the other names that I like McDonald's, Walmart, Eli Lilly, Chipotle, they may come down while some of these names start to go up. So that's why I say go with the grain, because buy the names that are cheap when they're cheap. Wait till the other names that are expensive get cheap, and this is how you're going to be adding over the next 10 years. So hopefully you're seeing how this all relates. You know, what do you do in a recession? What do you do right now, whether it's hard landing, soft landing? You all need a savings plan, and focusing on quality, it's still the same answer. And when it's all said and done, you want to diversify. You want to have a little bit of cash. You want to keep adding to that savings, have a little bit of growth, and have a little bit of value. And you don't want to have all your eggs in one basket, because quite frankly, until we get a shift in the economy and we're going to see all the other things at 24 and 25, the election and all of that, then we're going to be able to decide where we go from there. So I hope that helps, but that's the first part of your watch list. I know, very, very long-winded, but that's your economic lesson, and I hope that helps. But now, for those of you interested on what we're going to deal with this week, summer is officially over. I actually think it's not until fall, or I guess middle or end of September we start fall, but Labor Day, this is where Wall Street was supposed to come back. So like I've been saying, maybe we get a little bit more volatility and volume as everybody comes back, but we kind of saw how August played out. There was a lot of volatility, a lot of volume. It was here today, gone tomorrow. Maybe we enter September and the end of summer with a little bit of a hangover. So we'll find out how it plays out, but the same questions remain all the way until the next 2 weeks here until we get Jerome Powell. But everybody wants to know, how many rate cuts are we going to be getting? How big of a cut is it going to be? And how bad or good is the jobs market and economy? Even though we're starting to wrap things up, these are the main things that we are looking to answer. And by September 18th in Powell and the data, this should answer all of it. So we'll see as that data comes out if it does bring back volatility and volume. So watch out for that. That is your first key. But now coming into the second key and the big driver on the week now, we are going to be looking out for the non-farms on Friday. I think this is actually going to be the biggest event. I've been saying bigger than the CPI, and this is, if there's anything that's going to move Powell or change the odds of rate cuts ahead of the event, it's going to be this jobs report. And really, what you got to watch out for is a big miss. If we get a big miss downside and it looks like the jobs market is actually cratering more than expected, people aren't going to like that, and I think they're going to freak out because then they're going to say, well, the jobs market is starting to plummet. Maybe we have a higher odd of a hard landing. Then everybody flips out. If everything is in line or slightly above, then I think everything is going to be according to plan, and people are going to be liking that. But that being said, I will tell you, this was over the weekend. You got to talk to me. Bring this up during the live on tomorrow, and we could use this as one of the unlocked charts. I was going to save it, but this is something Bank of America and a couple of other analysts have been talking about, and it has to look at the jobs report excluding education and healthcare, pretty much looking at like the non-governmental additions. And when the jobs total falls below 40%, you are usually in a recession. The last 6 times from the 1970s, where private payrolls excluding education and health as a total of payroll growth has fell below 40, we have entered into a recession shortly thereafter. So why I'm showing you this, and once again, remember the downside revisions that we got and how sensitive people were about the jobs market. Powell was saying they don't want to see the market slow down now. They're fine if it stays there. If you do watch a big decline in jobs, that will get people more worried than not. Everything's stable, then everybody is going to feel good. But that being said now, beyond the jobs report, although I've been telling you that the jobs report is important, and I really do believe this is important, I'm going to say right here, right now, the ISM data we get this week, I think tomorrow and Thursday, we're going to get ISM manufacturing and ISM services. This is going to be secretly big. A lot of people on Wall Street are talking about it. And remember, it wasn't too long ago we had one of those ISM things, those ISM datas, and we just totally sold off, and it was a bigger number. And like I told you, people were viewing the ISM as a leading indicator. Don't forget about that. What I'm trying to tell you is, yeah, the headline and all the attention will be on the non-farms, but if you get a big enough beat or miss on any of this ISM service data, I think it could really move the bonds, and you might actually get a pretty big reaction off the ISM, so I wouldn't completely ignore it this whole week. So watch out for that. That is key number 2. And then finally, as we end summer and enter into the final couple of weeks, man. And like I told you guys, these next couple of weeks, very important. We got over NVIDIA earnings. Now we get the jobs report this week, even that ISM data. Next week, we're going to get the CPI. Then you get Jerome Powell. We're wrapping up all these earnings. And then before you know it, man, it's going to be end of September, October. And that's it. That's end of the year for some people. And you are getting ready for 2025. That's why I think it's important. We talked about the long-term savings and all of this stuff. So coming into the end of the year, I hope you are aware of some of the main themes and what we still got to deal with. Number 1, global tensions, what's going on with the wars, both in the Middle East as well as Europe. That's a big deal, but also how it's impacting commodities. Maybe we talk about this tomorrow. There's a lot of things going on with commodities as well, how they're moving in oil. This is a very big deal. We're dealing with that mixed in with the global tensions. You're still going to have elections all around the world, not just the United States, but also in Europe and other places. You're even seeing the fallout there from Venezuela. Venezuela. The elections are adding volatility to currencies and all of that. We have China going on, so whether it's end of the year or after we get a new president, we'll see what happens into 25. Don't forget, they're still collapsing. You've even been hearing about riots and a lot of other stuff there, so that's on the table. I accidentally exited that out. And then the consumer slowing down. Even this earnings season, some people did good, some did very bad, like Dollar Tree. We even saw Lulu and Ulta the other day. These are going to be those major themes tied into now whatever happens with policies, the rate cuts, and then the AI and earnings tailwinds to come in from there. So keep your eye out for all of it. What I'm trying to say is that we have a pretty full menu as we enter into either this is going to be a big deal to focus on end of this year, or if it's not, these will be the themes we'll be watching into next year. So I hope you're ready, Pachetta. Let us get into the plays. So right off the bat, I hope you guys are ready for a wild week. The only bad part, it's already Tuesday, so it may go by quick, but play number one, man, watch out for the Russell. I put the Russell futures. You could even watch the micro ones, M2K or literally IWM if you want the stock for the ETF, but will the Russell actually rally? This is a very big question, and I hope you guys pay attention to it. This has been a play. Go back even a year ago. I was making videos December 13th and right before the first time Powell was talking about rate cuts. If you guys recall, we were playing the Russell. We made a lot of good money on it, and it was a nice play, but this is what I want you guys to realize. I mean, ever since all of that stuff end of last year, I mean, it barely has moved for the most part. Just even a couple weeks ago, you were at the highs of when everybody was talking about that, and this is a big deal because there is still a lot of room to go on the Russell. It could still break out, and everybody's saying, yeah, rate cuts should benefit these companies. That's been the idea for the last year, but fact of the matter is, nothing has came to fruition. A big majority of the companies on the Russell are still not profitable, and as we're honing in on rate cuts, seeing how it's moving, people like the idea, and there's a lot of money behind it, but there is people doubting, and they're saying, well, if we get these slow rate cuts in a soft landing, maybe some of the names on the Russell benefit, but if all of these names are still unprofitable, why would they go up if we're not really getting a huge secular shift that's benefiting all these companies? Just a small increase or lowering to the rates, that'll help them out a little bit. So it's a very interesting take, but what I'm trying to tell you here is that this trade is coming into question. It was popular about a year ago. It's held up. It's even towards the higher end. It's not like this trade is dead, but as we actually now are just 2 weeks ahead of that rate cut and everyone's doing a lot of front running and all that, we really got to see how this one holds up. So watch out for the Russell. I think with the data and everything moving forward or in the next 2 weeks, I really think this is going to be a major play, both up or down, as it confirms or denies what everybody's been looking for over the last year. So watch out for that. That is play number one. Then play number two, Dell. This one I really like. I made a small play, though. I only did a $20 play on Friday. Which ones did I grab? I grabbed the September 6 130 calls for 20 cents, and really, I just like their earnings. They did good. They guided up. They have a fat range between like 100 and 160 on the stock. If there's any good upside in the chips, I think Dell will do good, and even then, the ISM. So if the ISM is really weak, that's going to hurt the chips and financials and other ones. If the ISM does good, then I do think the chips and other names will do good. But if everybody now, after NVIDIA and all of that, likes to chill out, and then we're going back to responding to the data, and the data gives us everything we want, then I think the chips, some of them can have a nice upside, or they have a big enough range. But then again, I was only willing to put about $20 on that play, so we'll see what happens with that. But that is play number two. And then finally, play number three, Intel. This one, very interesting. I'm still murdered on my clap shares. Believe it or not, the long-term shares, they're not actually that bad if you actually think about it. We'll see. I may want to add to that. That could even be another one of those growth names. But like we said, we want the dust to settle. But as far as what happened with these guys the other day, Thursday, Friday, even a little into last week, they've been getting all of this news. And the news is that they're going to pretty much spin off this company, stop the fab business, and a lot of other things. And that's why they had these board members leave. And long story short, had a very big day on Friday, and I think it could be very, very big news for the company. My only problem is it's moved up so much now. Will it be one of those sell the news type events that they do announce this spinoff and these rumors everyone's been getting hyped up on come true? Then is it going to kind of chill out? Until then, it's getting its own individual news. People are hoping for a lot of cost-cutting changes and maybe a positive spinoff with Intel. I mean, last time they did it, it did help them recover, but then again, they sold it all off. So hopefully it's not a last-ditch effort and it doesn't become like AAP or like VHC where they sell off all of their good units, but at least it shows they're fighting. So I'll keep an eye out this for the long term. We still are murdered on our flip shares, but I would keep an eye out to see if this starts to get more news, because this could be one of the only bigger developments here until we start to hear from the other chip companies following the earnings. So that is all I have. Those are the main plays. I don't think that I have anything else. I am going to be watching the bonds. I made a little bit of a flip there on Friday. We'll see how those play out coming into Monday, but when it's all said and done now, watch the data coming into Friday. We're setting the runway into a big week of data, and these next 2 weeks, man, it is going to be the set-all, be-all. We'll know everything, and by then, you'll get your rate cut uninverted curve, and then we're really going to know, is it a hard landing or soft landing? And I hope you save your money to find out. But Chad, that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, people often underestimate what they could do in 10 and overestimate what they could do in 1. Don't ever forget the long term. A bunch of little rivers always add up into a lake, right? Or little streams add up to a lake. You know what's happening. I love you. Drink that water. Stay hydrated, healthy, all that good stuff. I'll see you in the morning, and horn.